Now, one of the things that you're sort of alluding to is this shift that we've seen in ETFs towards a more active management within the ETF wrapper. And the industry has been pushing that way for a little while. We've seen growth. It's still a small percentage of the overall total. What do you think would sort of tip the scales or cause the active ETF game to gain a little more momentum?
I think the scales have tipped. I think active ETFs had a breakout year in 2022. Here's the stats. And you're right, active ETFs only make up about 5% of overall ETF AUM. So we've got about $7 trillion in ETF assets here in the US. About 5% of that is in active ETFs. Going into 2022, active ETFs are 5%. They accounted for more than 20% of the net flows across 2022 last year. And that continued in 2023. In fact, year to date, active ETFs are accounting for about 30% of the net flows into the ETF space. So investors are absolutely embracing active ETFs.
But it's still only 5% of the total?
Yeah, but like think about the market rallied this much. It's like, so it's growing as part of the pie, but the pie is growing at the same time. Now, you're making a really interesting point. And I think this is where the penny finally dropped for investors. The ETF is a technology. Use the word wrapper. The ETF is a technology. It trades throughout the day. It's tax efficient. It's transparent. It has all these other benefits that investors really appreciate. I talk about it gives investors control. The ETF wrapper gives them control. What you put inside of that is just as important. And to your point, you've had a lot of indexes that have been delivered through the ETF wrapper, and that's a great use in portfolios as well. But when you can use proprietary active management like what JP Morgan does, we pride ourselves on that. So we have 1,000 investors around the world. We invest $400 million in active management and research every single year. Our proprietary active management, we're taking our best investment capabilities, the best thinking across JP Morgan, and then delivering it through the convenient ETF wrapper. And I think investors are now saying, oh, I think this is a really important piece of how I can build better portfolios. And that's why we're seeing the flows that I referenced earlier.